warm welcome. You are watching this special coverage on Budget 21-22, and I have a very special guest with me, Mr. Andrew Holland, CEO, Avendus Capital. Good afternoon, Andrew, and welcome to this show.
Thank you for inviting me. It's a pleasure.
Brave budget indeed. FM has bitten the bullet this time, and with the FY21 fiscal deficit now being pegged at 9.8% and FY22 being pegged at 6.8% of GDP. How do you see this?
So I think if you would have asked anyone in the market, what would have wished for, I think they would have wished for something, that we've seen today from the finance minister. I mean, we've all been saying for the past however long, let's get some fiscal spending, let's help the economy along the way. So maybe right time, right place, right timing is good news, because the economy, we can see the economy starting to pick up. So this is a good push, for the economy, to not just kind of have that kind of rebound and growth, but I think lays the kind of the groundwork for the growth to continue thereafter. So it's a budget which I do like. Overall, I mean, yes, there's going to be worries about the fiscal deficit and so forth and so on, but I think globally, everyone's making this push towards fiscal expenditure and getting the economy going. You really want to get your economy moving, and so in the short term, your fiscal deficit or is above expectations. I don't think investors are going to worry too much. I think they'd be more worried if your growth is slipping. Or being stagnant as you get through COVID, and you'd be expecting your economy to expand a lot quicker. So I think it's been a good budget.
Good focus on infrastructure this time. I mean, FY22 capex being pegged at capital expenditure being pegged at 5.5 lakh crore. This kind of an investment in infrastructure, the focus has been of the government on infra, but the execution part is more crucial. How do you see this?
Yeah, so I mean, obviously execution is always the key, and to my mind, obviously, when you're spending on infrastructure, it's not going to come out, tomorrow, right? It's going to take time for that to go through. It's the execution and of existing projects, and the cash flow for those projects are more important. And then we've seen, some results from Larsen Toubro, which is showing the order book is good. Execution, has to improve. But the good things that I like about this is that. With this development financial institute, that means that, as that gets capitalized over the next year or so and starts, that will have the ability to lend money as well, right? So it's not just going to the PSU banks or the banking sector. There's an independent kind of source for funding these projects. So I think that's another good move by the government. Obviously recapitalizing the PSU banks and maybe having this ARC, which we still have to get the details, but let's just say that takes some of the problems off the balance sheet of PSUs. Then again, they have a balance sheet which then can be utilized to help fund some of these projects. So I think the package is a good package of the infrastructure spending, but also the ability to then fund it. I think is something that they've been very constructive around this. In this budget.
A very bold asset monetization plan laid out in this budget. I mean, we are talking about disinvestment target has been modest from the last target that they had set for FY21 from 2.1 crore. It has been tamed down to 1.75 lakh crore with a list of companies which have been, been trying to get disinvested from long now. We hope that the next financial year we see some kind of a disinvestment coming on that front, and two PSU banks to be privatized, one general insurance company to be privatized. How do you see this?
Yeah, again, it's the kind of the normal high expectations on the divestment front, and they've been there for many years. But I think with the equity markets where they are, if you can't do some divestment now, you probably never will. So, my view would be if they can get some divestment under their belt early on, I think that would kind of alleviate some of those fears on the fiscal deficit, because you can see that the divestment program is picking up. Two, there's those other monetization of assets like land sales, which I don't think are in that figure at all. So again, that could be another windfall in terms of funding. But I think LIC obviously will be huge, and would garner a lot of interest from foreign investors and local investors going forward. So I think you utilize what you've given the market is a growth economy and growth for equities. So therefore, if you can use the equity markets now to your advantage, it's a win-win, I think, both for the government but also for the equity markets.
FDI in insurance has been hiked to 74%. So do you see this attracting some kind of foreign flows into the country?
Oh, completely. I think you'll see. I mean, a lot of foreign insurance companies have been asking for this for many years, and obviously the government now feels that the local industry is at a stage now where it can face kind of more multinational type of investments into this field. But it's a time again when opening up that sector for foreign direct investment is going to again have that whole sector. I mean, if you think about after COVID, we're all going to want more health insurance and so forth. It's something that we all want. So again, having well capitalized insurance companies with competitive type products has got to be good news. So again, a very, very bold move, which is, I think, going to be well received by the market.
Another good thing is voluntary vehicle scrappage policy introduced this time. For private vehicles, 20 years assessment, and for commercial vehicles, 15 years. How do you see this auguring for the auto sector?
Yeah, I kind of need to look at that a little bit more closely, because voluntary means voluntary, right? So I don't know exactly how that's going to pan out. I don't see it as, unless I need to see the fine print, but unless it's kind of really forcing you to do something. If it's voluntary, then you might not rush to do it unless there's an incentive in there for you to volunteer. So I don't see it as being a big push for the auto sector right this second. But I just need to see that fine print.
Affordable housing sector has been given a SOP, which has been extended till for 1 more year, till March 31st, 22. So has enough been done for the housing space? Because housing is seen as a sector which generates employment and really it leads to a better growth prospect. So do you think budget has done enough for housing?
I think on affordable housing, it's been something that we've been very bullish on for a number of years now, because I go back, this is a long time ago, I go back to my Thatcher days, which, in the UK, they opened up council housing, which is similar to affordable housing here with lower interest rates. And that's really how the kind of whole, kind of housing market kind of built in the UK. And therefore, people, started competing with each other in terms of, their homes and then moving up the ladder. And I think that's a great base, for the housing market to continue to do well. Obviously, the likes of, Maharashtra doing a reduction in stamp duties, you can see that people now are saying it's affordability. Can we afford a housing? And you can, and affordable housing obviously is there anyway. But I think I think this is again another fillip for the housing sector. Just as it's starting to take off, it's given that extra push again, which I think is, we might not, affordable housing, sitting in the city that we are, we might not be, kind of cognizant of how it's really kind of moving. But from what I hear, it's been taken up very, very strongly by people. So I think that's a great push up the ladder as the economy continues to grow and people's disposable income increases. And with interest rates where they are, I think, we're already seeing that pick up in real estate. And don't forget, real estate, for the last, 5-8 years, has been an asset class which everyone's forgotten about, right? To be honest. So I think, again, it could well be, a pickup in investment there going forward, which, as you mentioned, is a good knock-on effect for the economy, because it brings in lots of different industries, which benefit from that, and obviously employment.
Andrew, big thumbs up by the markets. I mean, Sensex and Nifty are up by more than 4% today. Do you expect this kind of a trend to sustain? I mean, FII flows into India have been buoyant in equity market. How do you see markets from here?
So, I think we all came in with very low expectations. I think prior to the budget, there was obviously some global factors as well, which obviously improved in Asia this morning. I think followed through into Europe. So that was a nice backdrop to have the budget. I think one of our views has been that investors, when they look outside of development, two things: one is yield and one is growth. And we believe that Asia, led by China and India, would be the areas that they'd start to invest in. And I think the budget for India has given now the reassurance to investors that the growth will continue in India. From the rebound that we're expecting from COVID, you've got that extra move which you can see going forward. So whilst we're talking about 10% GDP growth plus. For 21 and 22, you can see again there's a lifeline towards a kind of a 6 to 7% thereafter, given the push that the government's made. So all in all, I think when investors look in, they'll say, okay, yes, Asia is still the growth area we see, a growth engine of the world, and China, now India, will be part of that big growth. I think the other thing that we all miss is we think that millennials are going to have the spending power, and we're already starting to see that right around the world. But if you look at numbers, the US has around 60 million millennials, whereas both China and India have over 300 million each, respectively. So where the spending power is going to come over the next 4 to 5 years, and I think that's the growth story which investors will look towards emerging markets, but particularly towards Asia.
Any of the sectors that you like the most?
So, if we're going for this, economic recovery, which obviously is underway and now helped by the budget, then it's going to be those sectors which are going to be the big beneficiaries of that, which obviously is your banking or financial sector, industrials, energy, and consumer discretionary. All of those sectors will do well. And then you could also add in the other sectors which will be beneficiaries of all of that, which is partly to do with your housing. But unfortunately, there's not that many housing companies which you can invest in. So you have to go to those related industries as well, which get back to your consumer discretionary.
So how do you rank the budget on the scale of 10, Andrew?
I'm never usually. In the years I've been here, which is over 20 now, I think there's only one budget that excited me, which was Chidambaram, and I can't remember which year, but it was late 90s, I think. This is the first time I've actually felt quite bullish that the right things are being done at the right time. 10 is always difficult because I think then I would want to have tax reductions as well. So, but I certainly think that 9 is certainly where we are today. So for the first time in a long time, I've actually become excited about the budget.
Thank you, Andrew, speaking to you. It was a pleasure speaking to you and sharing your views with us. Thank you so much.